Our business editor, Ross Greenwood, who joins me live now. Ross, great to see you. First of all, let's start on this review. Interesting that Jim Chalmers is saying he doesn't want this to be a witch hunt, but those undertakings that guarantee almost by Phil Lowe that interest rates wouldn't rise until 2024 will be looked at and be part of this. Is that a good idea?
Yeah, well, it's interesting that he says it's not a witch hunt, but in all reality, it's about whether the Reserve Bank is fit for purpose for Australia's economy right now, whether it's actually got its settings right. So as a part of this review, there will be a look back at the Reserve Bank's performance, the way it's used monetary policy tools, the appropriateness of its settings during the pandemic, before the pandemic, and even today. The issue about this is really about whether the Reserve Bank has, if you like, served the Australian public well, and whether its role in going forward is going to be similarly appropriately well served. He says it's fit for purpose right now. He also says the Reserve Bank should explain its own interest rate settings during this period of time. But one of the other criticisms of the Reserve Bank that comes from senior economists is the fact that it effectively printed $350 billion worth of money at a time when the government was stimulating Australia's economy during the pandemic. Now, sure, they were concerned about Australia's economy in the early days of the pandemic falling off the cliff, but the reality is that that money that was printed is also creating today's inflation that could lead to a rocky economic future for Australia, and indeed lead to higher inflation over a longer period of time. So the other interesting thing about this that I know today is that Renee Fry-McKenzie, who is the interim director at the which institute is that? I'll get that in a moment, but she is one of those economists who has called for the review of the Reserve Bank. They called for an external party to come in, and so as a result of that, you've now got that in terms of a senior Bank of England figure coming through to help do it. But Renee Fry-McKenzie is one of the absolute keys to this, having been part of the senior group of economists who recently called for this review of the Reserve Bank.
Yeah, Ross, I think it's interesting that the three panellists, Jim Chalmers, say they were the first pick. Do you think they're good appointments?
I think they are. The one that's interesting here is Caroline Wilkins. Caroline Wilkins, having been a senior member of the Monetary Policy Committee at the Bank of England, was what that independent group of economists had called for. They said it was not appropriate for the Reserve Bank to effectively have its own review into itself. They wanted seriously external parties to be a part of this. And this is a reason why I'd suggest that in many ways Jim Chalmers has ticked the boxes here that the economic community wanted here in Australia. But this also means that it is a genuine test of the Reserve Bank. The fact that he's also reappointed one of the directors for a longer period of time means that once this review is complete, there can be a change in the way in which the composition of the board and those people going forward really come. One of the criticisms from the economists is there have been no economists of monetary policy repute on the board. They've generally come from industry. Now, industry figures are important because they give you a sense of what's happening in the business community, but really much of the, if you like, the macroeconomic signals have had to come in many ways from the Reserve Bank board itself. So in many ways, there's been a feeling that there's been a groupthink at the Reserve Bank, that it hasn't been really, in many ways, as independent in its thinking as many people would prefer it to be. And indeed, you don't see the debate inside our Reserve Bank board the way in which you do in other central banks, including the US Federal Reserve.
Yeah, really interesting, that point about groupthink. Can't wait to see what this review throws up. More generally on the economy, we're going to hear from the Treasurer next week. He's giving an economic statement to Parliament. At our Sky News event a couple of weeks ago, he already flagged weeks ago that inflation would be much higher, he thinks, than even the Reserve Bank is predicting at the moment. He's talking about sluggish wages, which is a central part of their election strategy, and inflation being a big part of that, obviously. Talking about this moderating of inflation next year, which will help real wages growth. Is that optimistic, pessimistic, or somewhere in the middle?
Well, given the fact that we probably are lagging 6 months behind other parts of the world, notably the United States, you'd have to say that inflation is raising significantly higher and wages are going to battle to keep up with that. It's when the inflation rate eventually falls, and you can already see that things like oil prices, timber prices, copper prices have already fallen significantly. They're generally deflationary. The real worry for Jim Chalmers right now is that wages expectations actually start to rise. That people really imagine that they should be getting 8 to 10% wage rises to cope with the rising cost of living and indeed even the rising price of interest and mortgages that they're having to pay. And so that's where ultimately, if that inflation gets out of control, then the interest rates will have to rise even higher to basically hit the inflation out of our economy. Now, the expectation is that if they can get on top of this quickly, then really you might not have the real economic cliff that could face other nations around the world, with the prospect of a recession in the United States and probably in the UK as well. Australia could avoid that, but it really is going to take all of the manoeuvrings of not just government but also of the Reserve Bank. And getting back to the review of the Reserve Bank, one of the big issues here is the coordination of monetary policy, which is the Reserve Bank's remit, plus also fiscal policy, which is the government, and whether there's genuine coordination between the two in controlling the economic levers of our nation.
Coordination, but not collusion. They need to be separate entities. The Treasurer was talking about trying to protect that sanctity of independence around the RBA this morning. Essentially, at the end of this review, Ross, I think we're in agreement that it is necessary. The Treasurer wasn't talking about whole-scale change here, but more tweaks, but important tweaks around the edges. Is that about right?
I think so, but there's one other issue about this. It's whether it's fit for purpose. I mean, right now, the key areas of the Reserve Bank, its charter, say that it needs to be promoting effectively economic prosperity in Australia, that it tries to maintain full employment. One of the criticisms of the Reserve Bank is that it actually moved its target on where full employment was. Previously, that was considered to have a 4 in front of it, at which point in time it probably should have been raising interest rates. But then when it got to a low 4 unemployment rate, suddenly the number seemed to change to something with a 3 in front of it. So again, the question about why that changed should be something this review should undertake, because it could be that the Reserve Bank has been too late to raise interest rates here in Australia when other parts of the world were already seeing those rate rises. A second part of this is also about that inflation targeting between 2 and 3%. Well, for almost a decade, the Reserve Bank had inflation below that 2% mark, and yet it did nothing about that. It didn't actually cut interest rates at that time in response to the very low inflation, which would be the normal response it should have done. And so the question is whether that was appropriate. It was fearful at that time of provoking another housing boom, which it didn't feel was necessary. So, as I say, all of these issues become a part of this review and a part of the way in which the Reserve Bank, a really important institution, most important institution in Australia for most people's lives, the way in which it behaves into the future.
Just a really quick one, Ross. Is there a question here about how the instruments in which we use, the economic indicators? I mean, there's been talk about, in the US, they get a monthly read on inflation. I know when the RBA was waiting to move on rates, we could all see what was happening on the economy, but they were waiting for that official data. Do we measure the unemployment rate the right way? Do all these things need to be tweaked as part of this review, do you think?
There's no doubt that has to be a part of the review. I think the fact that they have not had monthly inflation numbers is really detrimental to the way in which the Reserve Bank has gone about its job. And I think even the Reserve Bank Governor has acknowledged this in the past. But the second thing is the wages index. It's another part of the inflation story. It needs to be done on a monthly basis. And so as a result, the central bank has got to have everything at its fingertips that it needs to be able to make decisions. A second question also to remember is that in Australia, there are monthly meetings of the Reserve Bank. There are not monthly meetings of most central banks around the world. There might be, say, 7 meetings or 8 meetings a year, not the 11 meetings that the Reserve Bank has. And so it's almost one of these points whereby there's an ongoing narrative about the next move of the Reserve Bank, whether we need to have them as often as we do. I think that's really important. And then a final aspect of this is really even then the communications of the Reserve Bank, whether they are appropriate, whether they're put to enough inquisition about the decisions that they make. These also are going to be issues that should be raised as a part of this review, because what you can see is in other parts of the world, New Zealand, you can see it in the Bank of England, you can see it in the US Federal Reserve. They're certainly more open to conversations and discussions and inquisition about the decisions that they have made, and maybe that's something that the Reserve Bank here should also have learnt some time ago.
Ross Greenwood, great to talk to you. We'll see you soon.